Hello everybody, welcome to Webinar Wednesday. My name is Martijn Lofvers. I'm the Chief Trendwatcher of Supply Chain Media. I'm also the Editor-in-Chief of Supply Chain Movement. That's a quarterly magazine in Europe, but also a huge group on LinkedIn, over 50,000 members. And I'm also the organizer of the European Supply Chain Startup Contest since 2018. We'll talk about it later. So welcome to this live webinar. The next 60 minutes, we'll talk about CBAM. So basically how to turn compliance into a supply chain advantage. And with me, I have an expert on that field. And let me introduce him. Gabriel Rozenberg, he's CEO and founder of CBAMBOO. So welcome.
Hi, Martin. It's lovely to see you. Thank you so much.
So basically, one of the reasons he's joining me in this webinar is he's the winner of the European Supply Chain Startup Contest 2025. So in the middle, you see him with his two colleagues in Amsterdam, receiving a check for a media campaign with us during our Innovate Supply Chain event. So congratulations again. But
Thank you.
before we move on, first, can you tell me something about your background? So now, how did you get to this point to get to CEO and founder of CBAMBOO?
Yeah, I mean it's an unusual path really to coming to this.
Okay.
Um, I've always been interested in politics, public affairs, business, economics, and I've done various different variations on that area of life. I started as a journalist actually. I live in London, and I was an economics journalist, writing for the Times, national newspaper here. Um, and then I switched into fund management. I was an equity analyst and then an investment director at a hedge fund. And meanwhile, I had a sideline as a local politician. I did that for a number of years. And in all of this, I wanted to try to build something. And you don't build much in politics and you don't build much in fund management. Where do you build? You build as an entrepreneur. And uh, I was particularly keen to build something that could have a crossover to the climate crisis and be, in some way, some small way, supportive of efforts to to tackle the climate emergency. And a couple of years ago, my business partner Daniel Sharp and I got talking about the regulation that was coming out in Brussels and around the world that would not just measure carbon, right? Measure CO2, carbon CO2, but would actually put the costs of carbon emissions into financial terms and put that on the plate of the CFO, of the procurement team, and the supply chain team. And we were very, very interested that the EU was working on this with the EU CBAM. And so we said, well, we're going to build a company that's totally focused on that, with the skills that we've got in terms of understanding regulation, understanding how businesses work, understanding how to build user-friendly software, and that's CBAMBOO.
All right. Okay. So we'll talk about it in the next hour. So some practicalities for the audience. So this webinar will be recorded and will be made available on YouTube. This presentation will also be downloadable as PDF. So the audience is on mute, but you can all interact with us. On the right-hand side, you see the chat functionality. You can chat, but I will follow the functionality just one below. You see the small text bubbles. There's the Q&A functionality, so you can ask questions. And if these questions are in line of the conversation I will be having with Gabriel, I will ask these questions immediately. If not, I will reserve the questions until the Q&A at the end. So you can engage with us about this important topic. So after this Q&A, there's also an extra 30 minutes. So Gabriel and I will putting off the cameras right now. So we will be available after the whole hour to have a further conversation, and then you can even talk to us further afterwards after the whole hour of this webinar. All right, so you can enlarge your screen so you have a better view on the slides. So, but it's probably better to listen what we all are going to talk about. As I mentioned, I'm also the organizer of the European Supply Chain Startup Contest. And this is the overview of the startups we have analyzed for this year. And in the yellow section, you see all the contestants of this year. And basically, the blue ones were the other two finalists. And well, in orange, you see CBAMBOO as the winner of this year's contest. So, Gabriel, one question about the contest. Why did you enter the contest, and what is your feedback on that?
I mean, it was a great opportunity to get out there and get ourselves seen in the world of supply chain and procurement management across Europe.
Hmm.
We're based in London. A certain number of people think that we are not in Europe anymore. It's certainly the case that our governments at different times have tried to make that negative message heard. That's not how we feel. We have a very international team with all different nationalities in the room. And we're super engaged in different countries across the EU. So the European Supply Chain Startup Contest was a fantastic way for us to get in front of the people who are really making decisions when it comes to uh, environmental procurement. Most of the emissions that we're responsible for in the EU, in Europe, and in the Western world are emissions that are carried out in other parts of the world by people making products for us, right? They
Yep.
are making the raw steel, burning huge amounts of coal to make that. They are creating aluminium, cement, fertilizers in the global market. And those are the hugely important processes, but also environmentally very damaging processes. Supply chain managers sit at the top of that. They can make that decision about where to procure from, about whether to choose between a high carbon emitting supplier or a low carbon emitting supplier. So this is a super important world of customers and companies for us to talk to, bounce ideas off. It was a great contest to enter, and we're really delighted to have won it.
Yeah, of course. And I still regard as the UK as part of Europe, maybe not of the EU, like Switzerland. But and if you look at Netherlands, regarding to CBAM, is the Netherlands in a great environment for you to be in?
If I had to choose today where to move if I was told you have to move to the Netherlands, I'd say that's the best place in Europe for me to set up a company like this.
Okay.
um, because there are a couple of reasons. First of all, the Netherlands is a trading nation, and a global trading nation, right? Not a European trading nation; it's a global trading nation, and so an awful lot. And you don't need me to tell you this. An awful lot of the imports that are coming into Europe and distributed throughout the European manufacturing supply chains, they come to Europe in the Netherlands.
Yeah.
Secondly, for that, partly for that reason, partly because of proximity to Brussels, the Netherlands has been pioneering on CBAM management. So your government authority is probably the most clued up authority in the network about CBAM. CBAM is the European Commission creates the rules, but it's up to member states to implement those rules, and some of them are more advanced than others. The Netherlands leads the pack.
Okay. That's
Um, I don't think it's a coincidence that a very high number of our customers, a high proportion of our customers, are actually based in the Netherlands. Finally, also, it's a center for carbon markets.
yeah.
If you want to buy EUAs or you're involved in, that is to say, EU allowances to emit carbon dioxide, you're probably going to go to a company in the Netherlands. So yeah, it's a really important hub.
Okay. So let's talk about the carbon border adjustment method. So who cares about CBAM?
Yes, who cares about CBAM? Okay, so look, the way I would sum up CBAM is that you should think about it in three different ways, right? It is a carbon law, it's a supply chain change, and it's a tax. It brings together all of these different components. The the reason that you should think about it in these three different ways is that if it was any one of these things, it would be very easy for a company to know how to manage it, right? Carbon law, you tend to get the person in charge of sustainability to look at that. Trade and supply chain measure, well, that's the trade compliance team. And very often we do see CBAM issues being assigned to the trade and compliance team. But it's a payment. It's an actual tax on imports, and you wouldn't uh, uh, you would not want the trade compliance team to be the only people who are involved if it's the case that the tax is quite large, and that you can vary the scope of the tax, vary the intensity of the tax based on your business decisions. And CBAM is one of those taxes, right? In accounting terms, you can think of it as a tax that applies to gross profits, not to operating profits. So it affects your margin on your goods, okay? And things that affect the margin on goods, they can be altered by management decisions. So ultimately, this is something for the CFO to understand. And if you are importing a significant amount of products, then you need to think of it as a tax first and a trade and supply chain measure second, as a carbon law third. It totally depends on what your business is. The reason we've got a meteorite on the page here is, this is unlike anything we've seen before, and its impact is going to be quite major.
So can you give some examples what the impact of this meteorite will be?
Well, I actually, in the long term, it's going to be the case that for some goods, the cost of CBAM is going to be a lot more than the cost of the goods themselves.
Hmm.
And for a number of other goods, it will be at least in that area, right? We are talking about a situation where today, if you want to buy the right to emit a ton of CO2, you're paying 75 euros a ton. And that is a very substantial amount if you're buying steel and it's several tons of CO2 for a ton of steel. If you're buying aluminium, the same. Cement is particularly cheap on a per ton basis, but the carbon emission cost is going to be the same. So you're going to see some very substantial increases in the prices of basic goods over the course of the CBAM period. Now there's a ramp up here, which we'll come on to, but these are big numbers.
So can you tell me about what's the reason for the EU to introduce the CBAM?
Mm. Well, you have to take it back to the fact that we are currently in a world where you pay to emit CO2 if you are within the EU and you are a domestic manufacturer of some scale. And your listeners will be familiar with that. That's the emissions trading scheme, and the right to emit is called the EUA, the EU allowances. I expect people on this call are aware of that, and they may be aware that there is a system in place to offset the negative impact of that, which is a system of giving out free allowances. Why does the EU give out free allowances? It seems to undermine the whole point of the system. Well, if they didn't, then you'd have this problem of carbon leakage, right? Carbon leakage doesn't mean like methane leak. It's not physical leakage. It means economic activity going to non-EU areas where there is either a low carbon price or no carbon price at all. So the allowances are a way to prevent that happening. But if the EU is going to make good on its net zero goals by 2050, it needs to phase out the use of those free allowances. In fact, the way that the emissions trading scheme is designed means that there's only a limited number of allowances that it could give out. So it absolutely has to start phasing those out, and it's going to phase them out from 2026, which creates this carbon leakage risk. And that's why we need a different system.
So basically, also to prevent dumping of high carbon emission raw materials into the European market.
You could call it dumping. You could call it simple supply and demand.
Yeah.
If you're purchasing aluminium, you can buy from a domestic producer that has to pay a carbon price, or you could buy from an international producer that doesn't. What are you going to choose?
Yeah.
So what's the alternative? Well, it's to create a kind of border around the EU, which is the CBAM. It levels the playing field. It says if you're buying from a region with 10 euros per ton carbon price, and it's 75 euros per ton in the EU, then at the border you're going to pay 65 euros per ton.
Yeah.
And so it levels the playing field. In theory, it's a very simple system.
Yeah, and it's gonna come. It's going to start January 2026. So it's not something like.
It is absolutely going to start. In fact, I can tell you that just today we've had agreement in Brussels between all the different working parts of the EU system about the final text of an update to CBAM, and it is absolutely going ahead as planned in 2026. The administration of it is being drawn out a bit, but economically, from January, what you're bringing into the EU, that is going to have CBAM attached to it. That is absolutely nailed on, definite.
So you see here, the overview. Maybe you can explain the phasing out.
So we're going to phase out the free allowances. So this is a graph that shows you the free allowance that operates here. So if you are currently get free allowance as a domestic producer, then in 2026 those will be reduced by 2.5%, and so on until by the end of this period that you can see on the chart, you don't get any free allowances. And there is an equivalent system for anyone importing goods. But one thing to bear in mind with this chart is that free allowances only apply up to a certain level, known as a benchmark. Anything above that level, you pay for in full.
Mm.
And so when we bring in a CBAM, it will be the same for the imports. In other words, if you import something that is €3 per ton, 3 tons per ton of emissions, but the benchmark is only 1 ton per ton of emissions, then you'll be paying in year one for all of 2 of those tons plus 2.5% of the remaining part. It's a bit difficult to describe, but essentially what I'm saying is if you're buying from a heavily polluting company in China or India or somewhere like that, that is significantly less green than the typical European producer would be, then the way in which this calculation works could mean that a lot of the phasing in happens at the start of CBAM, at the start of 2026. So this is absolutely something that, each is going to be different for each company. Each company should be doing its own analysis on its own purchases and figuring out what am I exposed to.
Clear. And CBAM is one of the EU regulations on sustainability. We have CSRD, and there's an omnibus ruling. I would say, wave is happening for the larger publicly traded company, and the smaller ones and the non-publicly traded company, they are, postponed.
Yeah.
But whereas the CSRD is postponed to some extent to some companies, CBAM is going on and it's going to happen. So if you are already ordering this fall products and you will be delivered in January, I think it is already impacted.
Correct. Exactly. That's something we're going to come on to
Okay.
in the financial implications here.
So maybe, we talked about it a bit earlier, but what kind of products are we talking about, of kind of raw materials?
So it's pretty simple, really. There are 6 categories: iron and steel, aluminium, cement, fertilizer, electricity, and hydrogen. Actually, if you were to simplify this down, you could almost just say steel, right? I mean, the metals industry is disproportionately important in terms of its economic weight on this list. First and foremost, you're looking at impacting the European steel purchasing, and it also the metals industry is significant, as you will know yourself, has significantly more complicated uh, supply chains than for example, the cement industry, which doesn't travel very far and tends to have
Yeah.
fairly simple linear relationships. And when I say, iron and steel and all, list these goods, I am talking actually quite concretely about 749 CN codes that have been identified as part of CBAM.
Mm.
Why those codes? They represent about half of emissions, and they are the easier goods to measure the emissions of, relatively speaking. But the EU is going to expand CBAM. At the end of this year, we're going to hear about the new sectors that it is going to expand these to, and possibly expand to more downstream products. That's a very live debate in Brussels right now, as I'm sure some of your audience will be aware. There are plans to expand this to polymers, plastics, various other industrial products that we could expect to see. And so we're still waiting to see how the expansion of CBAM comes, but the aim is to cover everything that would be covered under the EU ETS.
One question regarding steel. Is it only steel raw material, also steel finished products?
I mean, it depends on the level of finished. I'd say in some cases it's finished products. If you consider a fastener to be a finished product, I don't know, a screw, a washer, uh, uh, the sort of components, this is sometimes called C parts.
Yeah.
I would say those are finished goods, but they also go into complex goods in great quantities.
Yeah.
But
Yeah.
they are in scope of CBAM, for
Okay.
example.
Okay.
So, it's not just raw steel, certainly not. It is, I'd say, raw materials and semi-finished goods, which have relatively standard production systems that are fairly easy to compute the emissions of. I say fairly easy, it's not super easy.
We get to the point. All right. To sum it up, maybe say, okay, why CBAM and why we bother?
CBAM is there to raise the cost of carbon on imports to match the fact that the cost of carbon is rising for domestic manufacturers. It is, if you like, a tariff, a carbon tariff. That is the simplest way to put it, although it also applies domestically. It's an equivalent to what is going on domestically. So it's not intended to be money raising in and of itself. It's not intended to be penalizing in and of itself. It's designed to create a level playing field. The impact is extremely wide. It's going to have trigger impacts on whole supply chains, and the scope is going to expand to new product categories and new products within those product categories.
Clear. And get to the practical side. So what does it mean for supply chain and procurement teams?
Okay. So I'm glad you asked me that question. I think that if you've had experience, I'm talking to the people on this call, if you've had experience in your company of dealing with CBAM, then you may have a slightly, if I may say so, out of date expectation of what you actually have to do. Why do I say that? I think that the people on this call probably have done, if they have, they should certainly have been asked to do so, compliance with CBAM, with what's been called the transitional period of CBAM, the ramp up stage, which runs until the end of this year. And in that compliance transitional period, the requirement has been to produce quarterly reports. That you have to get supply chain data, fold in your imports records, put it all together, you come out with some numbers and you send those numbers to the European Commission. And nothing happens, right? It's just a kind of a learning stage. And why I say that's out of date is, first of all, you need to think about the fact that there's going to be a tax next year. Okay. But are you thinking about the fact that that tax will apply to goods that you buy right now? Maybe that is not something that you're talking about in your company. Maybe that's not something that is obvious, but let's just think this through. Companies right now are probably putting in an RFQ to their suppliers for industrial quantities of goods. The suppliers may be in China, Vietnam, Malaysia. So that's going on in June in this example workflow. And then in August, they're going to raise a purchase order. And I call that the commitment date. At that point, you've committed to buy something, which means that unless you have some sort of cancellation or there's some sort of force majeure, the shipment falls off the boat, then you're going to be importing some goods in the future. Well, when are you going to import those goods? Let's roll it forward to January 2026. Why would you import the goods then? Well, because first of all, it takes several months for goods to travel on a ship. And secondly, there may be import quotas that stop the importer of record choosing to allocate those imports to 2025. And so there are many, many reasons why purchase orders that are being debated and discussed now are going to result in imports in 2026, which, as you will remember, is the start of CBAM. Now, nobody is actually having to pay at the border. The way in which CBAM is designed is that you total it all up and then you buy what are called CBAM certificates. And in year one of CBAM, those certificate purchasing has actually been delayed until year two, which may put you in a false sense of security, right? But as I say, you may budget that this is a January 2026 thing. You may have a cash flow impact in 2027, but the commitment date, that's 2025. So February 27, the certificates go on sale. Now you can finally calculate your precise CBAM cost, but we can help you estimate that much, much earlier than that. And then you have to submit your compliance report right at the end of this process. You've calculated, you've bought the certificates, it's all done and dusted, it's in your accounts. You just need to send that compliance report to the authorities. So CBAM is not a compliance system anymore. It's a system that procurement managers need to be thinking about it. When do they need to be thinking about it? When do they need to track and record the expected CBAM cost? Pretty much right now. And are they doing that yet? I would love to hear people's thoughts on this call. You know, we've got a Q&A, we've got a session afterwards. I would love to hear people's experiences. From what I've heard, they likely aren't doing that yet.
No. And maybe it's a wake-up call, so people, maybe some companies will do some front loading, as we have seen earlier this year before the tariff announcements. They are shipping all kind of goods to the US before things start happening with the raised tariffs. I don't know if that kind of front loading will happen in this sense, but we will see. Talk about the whole supply chain. Maybe you can explain how this is connected to the financials.
The importing company, once they've, they may track this through their system, they may be able to predict this, but when it comes to actually what do you import, you need to say what CO2 you're responsible for. And that's very difficult because you didn't emit this. You purchased something, but it doesn't have the CO2. We could talk about, there's a phrase, embedded emissions. The annoying thing about embedded emissions is that, physically speaking, they're not embedded at all. They've already been released into the atmosphere by the time you buy this product. So you can't bang on the steel and figure out the quantum of CO2 that is in there. It's the quantum of CO2 that's, literally left the manufacturing process that you're interested in. So you've got no way of getting that other than to ask your suppliers. But of course, there are distributors in the chain, right? So we've got a diagram here showing sort of chains of distribution and production: upstream production, distribution, downstream production, distribution. And it's actually a very difficult system to make work with spreadsheets. Like, if each of these little documents is a spreadsheet, you can see how that just is unlikely to work, because each company is asking the previous company in the chain, could you please send me a spreadsheet? And it becomes a game of Chinese whispers. When you try to chase this all the way back to the upstream mill, if there's no common platform for all this, and the EU has not created anything like a proper common platform for this data, then the likelihood of getting the data that you need is very slim. So, a lot of this process has been left up to companies. You have to get the data from the supply chain, you have to ask them for it, you have to require it from them, it has to be verified from next year. But how you do that, well, that's up to you guys, it's up to the market, and that's partly where we come in as well to help with this. The point is that the supplier emission data is what determines the tax amount, and that's why we need accurate and complete supply chain data.
Maybe look at that. It is this graph. You see different kind of colors of documents. Does it mean the more green one are the better ones compared to the red one who are not so
it could
clean?
be. Exactly, it could be. I mean, we're sort of adding information as we go here, right? And so each spreadsheet, if you like, shows the complete story of all of the emissions from the beginning to end. It's additive. You're told, take the emissions of what I bought, add our own emissions, that's the answer. Which kind of works if you have a simple supply chain with maybe upstream mill produces, sends it to a downstream mill who transforms it, sends it to an importer. You could imagine that, but I don't think that's your experience of supply chains, right?
No. So when I look at this, this is quite familiar kind of graph. Also, when companies trying to create a product passport, or they want to
Yes.
have upstream visibility, move on beyond tier one, it's quite hard. So in that
Yeah.
field, you're also playing.
Absolutely. I mean, it is part of what we need to build. It's not the whole product. Uh, it is at the heart of what we've got is what we call the CBAMBOO network, on which each supplier can have a page, and where emissions are linked, like where you have one company whose calculation is contingent on the numbers from another company, then we can link those companies together directly rather than requiring one company to send information to another that may then get out of date.
Yeah.
So that's
So
that's part of our process, absolutely.
yeah. So maybe you can give an example of a case study, with this kind of taxation.
Sure. Well, we have a kind of idealized prospect that we often bring into our conversations, and she's called Julia Bauer. She's head of procurement at a company called Deutsche Metallwerke. Now, we don't know what her supply chain is going to be, so we don't know the mix of goods that she's buying, what the emissions factors are on those goods. But let's assume that she's a reasonably large importer, importing 30,000 tons of steel and aluminium each year. Now, even without knowing anything more than that, I can tell you that she's got taxes for millions of euros, probably millions of euros from year one of CBAM. So this is an example chart that's taken straight from our software, where we've put in potential numbers, potential emissions factors for the different products that she might buy that are reasonable. And you can see, let's just go with that gray line there, that in year one of CBAM, she goes from 0 to 3.8 million euros of taxes in CBAM. And then at 4 million, 5 million, 6, comes right up to 12 million euros by 2035, assuming that her business grows a bit, that the carbon price grows as it is expected to do, and crucially, that the CBAM itself is phased in over that period. Now, why have we got two lines here? Well, it's to indicate the importance, even right at the beginning, of getting actual data from your supply chain. You see, until now, companies have been told you have to have supply chain data, but the penalty for not getting it has actually been 0. There are penalties in the law, but they haven't really been applying in practice, as it happens. In 2026, in the definitive period, it's going to be different. Not a lot of people realize, but you will actually be allowed to use default values if you want to.
Mhm.
The point is you won't want to, because those default values are set at a higher rate than the actual emissions factors of the companies that are in your supply chain. So getting supply chain data is now voluntary, but it saves you money to do so. If you estimate conservatively how much difference the actual values might be from the default values, then even in year one, you're saving 350,000 euros. It's not a small amount. And it could quickly become millions of euros that you're saving with accurate data. And that's before we get on to the point that once you know what the supply chain emissions factors are,
Mm.
you can make choices and changes to your supply chain. You could choose to drop a supplier. You could choose to switch to a different supplier. You could choose to buy more domestically where the carbon price might be lower because of the fact that they are using, cleaner fuel, cleaner electricity sources. All of these decisions we need to make visible. Right now, that no one's able to make sense of the legislation, let alone make sense of where their business is going. We've got the opportunity to put that data into people's hands.
Yeah. Another thing, when you come to think of it, when you have alternative choices to choose from
Mm,
where to buy, your competitors have also these kind of choices. So if
absolutely.
you have this data and you have this kind of graphs in front of you, and when to buy differently, if you have this data and the others haven't, you are having an advantage. But if you don't have it and the others have, you are also at a disadvantage, not able to choose this
Yeah,
other option.
I mean, my view is that if I'm telling you that right now your team are making purchases which have a tax impact,
Mhm.
and that if you are a heavy importer of metal, and there'll be many companies here who aren't heavy importers of metal, but let's just say you are, and it could be therefore millions of euros, that you're having to pay. I would say if you don't have a system in place, then you know that's just not a responsible situation. And I don't think companies want to behave irresponsibly. I think companies do not want to get caught out, but they are very confused by this system, and they're looking for guidance and they're looking for help. And I think even companies, the threshold for CBAM is 50 tons a year. Even companies below that level of imports are talking to us at the moment and saying, my board believes that, we need to be understanding what our obligations would be. We need to understand whether, if we do happen in one random year to buy 55 tons and we go over the limit, we want to know what that's going to mean so that we can budget.
Yeah.
And so, we're doing everything that we can to help with that.
Maybe you can talk us through the different kind of periods we go into in the next years, month.
Well, this is a little summary of the situation, just to think about the practical processes that are involved. Perhaps you've had some experience of CBAM compliance and you think, well, this is a very large, complicated system and it's a lot of work. Well, guess what? It's going to get more complex and there's going to be more work. So in the transitional period, you have to put together a quarterly report on your imported CBAM goods and include emissions data. That's not a trivial requirement. But in the definitive period, as I said, I believe that you will want to track your CBAM imports in real time. You will need to purchase CBAM certificates to offset your financial obligation, which is a non-trivial process. It's not just like filling in a form. You will need to get your supplier data that's verified. You'll put together a report that's an annual report. You will need to figure out what the carbon price was that was paid in the countries of origin of those goods. There'll be additional legislation to tighten some of this, changes to this, that are relevant. Some of it might make your life easier. There have been simplifications along the way. Some of it may be more complex. And then, of course, as I mentioned before, there's the scope expansion. And if there is a scope expansion, there's not going to be a transitional period for that scope expansion. These products are just going to come straight into CBAM. So, if your business hasn't taken the opportunity over the past 3 years to get itself CBAM ready, then there's, a very loud klaxon going off at this point in time saying, get started now.
So if I look at it, in the meantime, we have since April 2nd a lot of announcement of new import tariffs from the UK, from US, sorry, and then China responded. So we are in this phase. So what is this tariff turmoil doing about the clarity and the responsiveness to respond to CBAM?
So I think that the tariff turmoil doesn't have a direct impact on CBAM, but it has an indirect impact that's not particularly helpful. To a large extent, these are separate systems and they work in different ways.
Mhm.
So, CBAM is still on track, right? It will come into effect in January 2026. Payments, that has been delayed, but the economic impact is going to be exactly the same. But you will have a bit more time than previously expected to get the cash together to pay the CBAM bill. But apart from that, and the fact that the minimum threshold is now set at a sensible 50 tons, which was always very likely, CBAM has been reiterated at every level by the European Commission, the European Parliament, both left and right-wing parties, and by the European Council. So it's full steam ahead. If you are based in Brussels, lots of things are going on, lots of changes are, in fairness, happening, but this isn't one of them.
Okay.
But businesses aren't necessarily seeing it that way. They are at risk of saying, well, if we if we maybe just wait it out and delay, our response, maybe we'll see the European system delaying, because after all, these tariffs, they came and then they went down. They went up, they go down. Tariffs go up and down. And there's a potential for confusing something that is very short-termist and responsive to, slightly crazy geopolitics, which is tariffs,
Hmm.
and something that is much more long-term, much more considered. Brussels has been thinking about this, talking about this for decades, and it is a very central part of their long-term agenda on getting to net zero. So a company could get into difficulty if it thinks that these two systems work the same way. They absolutely don't.
So maybe it's some takeaways, and yeah, I get to the last one, but maybe you can
Yes,
talk us through.
sure. Well, just to come back to the key points, it's more than just a reporting system. Reporting is the last thing that you'll be doing. What you need to implement is a new business process that needs to take into the fact that each purchase you make, there could be CBAM attached to that. It could be significant. You need to think about, how does your company choose to track that, measure that? And the impacts are going to be millions of euros. The carbon costs from your supply chain are now a core number that your business needs to understand, and getting those accurate can significantly reduce the tax burden and give you options to further reduce the tax burden through taking sophisticated supply chain decisions.
Clear. So maybe go into practicalities. How can CBAMBOO help with all this?
Well, I'm delighted you asked. So actually, next month, the start of next month, we're going to be launching CBAMBOO Pro. And CBAMBOO Pro is focused on the definitive period. Everything we've built up until now has been for the transitional period, and that now companies are starting to look to the future and say, well, if I'm buying products now, if they are now having a real live CBAM cost, because they're going to they're going to cross over into Rotterdam or wherever it might be, Antwerp, in January 2026, I need to be tracking that. I need to know, when I buy something, what's the likely CBAM cost? I need to be keeping a running total. I can't wait until next year. This is urgent. This has to happen now. And that's what CBAMBOO Pro is all about. It lets you calculate your future carbon costs based on the purchase orders, not based on imports, which is a backwards looking metric like like other solutions that are on the market today. It lets
Hmm.
you compare supplier CBAM costs and budget for certificate purchases. There's a great deal of content in the software that helps you understand, plan, manage your future purchase of CBAM certificates.
Okay, clear. So this is probably where companies are looking at normally, or well, they shouldn't, but that's what they happen to use right now, I think.
Yeah, I mean, look, there is a legendarily horrible spreadsheet for suppliers to interface with EU declarants. It's literally the only infrastructure that the EU came up with for this very, very complicated multi-tier process. We just don't think you can do this with spreadsheets. And to be honest, we think that it's too important to be left to spreadsheets, right? In any event, companies that use CBAMBOO, they are not going to use spreadsheets to interface with their suppliers. They use the software, they use the platform, they reach out to their suppliers and say, you can join this platform that we're using, put your data together on the platform. The guys at CBAMBOO will talk you through it if that's an option that you choose. And then you will be able to get accurate data from you in a live format. That means if you suppliers realize that there was an error or you had a change higher up in the supply chain, it will update automatically. It's much, much better than email and Excel.
So I can understand, but I think that companies will be maybe bombarded with all kind of spreadsheets, in the near month about this. So
Yeah.
that's the reason why our network is being better. Um,
Hmm.
but my question, suppliers are also get requests to connect to all kind of platforms,
Hmm.
not only for CBAMBOO, but also for real-time transport visibility or for
Mm.
product passport. Aren't you
Sure.
afraid that they are, overwhelmed to get connected to all kind of platforms?
So, I mean, if you look at the kind of design of the CBAMBOO network, We've made it so that the more companies that are on the network, obviously, the stronger it will be. Each of those companies can connect to other companies. So we actually make it so that it is adding value to the supplier to be on the platform. And we even make it so that the supplier can use our platform to create an Excel, right? Some companies say, well, we just want to send this data in Excel. We say, okay, fine. Put your data on our platform, click export,
Mhm.
and send an Excel to that will make your life easier. By the way, this is a completely free tool for anyone in the global supply chain to use. You just go to cbamboo.com, create a login, and you will be able to put together your CBAM data in a super user-friendly way. It's much easier than a spreadsheet, and it's much more sophisticated than a spreadsheet. So, we're giving suppliers a lot of pluses here for putting their data together on our platform. But if a supplier chooses not to, and they say, we've put our numbers together in a spreadsheet format, well, our customers in the EU can take that spreadsheet, ingest it into the platform. That's absolutely fine by us as well. We accept all formats of data. What we're trying to do is just take the European Commission requirement, which is for companies to provide this data, and make it as easy as possible for supplier and customer to interface together in whatever way is necessary. And the CBAMBOO network is one of the big advantages of that. And we've got great results. The companies that are using our system are seeing that they're able to get data out of the supply chain much more easily.
So who's paying for this? Because you have to have a business model for this. So I was wondering if you say they can enter for free. So how does it work in that sense?
Yes, I mean the supplier, ultimately it's not their fault that there's this requirement. So the
Okay.
companies on the left-hand side of this picture with the CBAMBOO network, they can join for free.
Okay.
The declarants can access that network. They are paying us a fee. Someone's got to pay
Okay.
us.
Yeah.
We
All right.
think
Yeah.
it's
I
it's
understand.
it's 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 fair enough for the importer who has the tax obligation and has the legal liability for them to be the ones to pay for the service.
No, that's clear. I'm just wondering because no, but that it's to do the onboarding of the suppliers for free. That's a good way to get this network on the left hand side and to get a kind of flywheel of suppliers.
Absolutely.
Adding this kind of data. Yeah, and maybe maybe it's good to have a case study and to explain it further.
Sure. Well, this is just one of our customers. Um, metal stockholders, they have dozens of suppliers in many different countries around the world. They need to interact with them, get data, and they are going to go out there and ask them for that data. Using the platform, they can see everything is kept tidy, everything is kept organized. They can see who's provided full data, who's provided supporting documents, who's provided partial data. They can compare suppliers, they can look at the different numbers, they can say this one's an outlier, go back to them, message them, where is this, why are you getting this number? This doesn't look right, not sure you've got this correct. They can ask us to help with the kind of direct outreach to their suppliers, guide them through the process. And so the result that we got was that this customer was able to, in the first quarter in which you had to get actual supply chain data, was able to get a 94% data response rate using the platform. So pretty pleased with that for our customer. Definitely, they got a lot of value add from that because they are now in an extremely strong position to figure out their costs in a CBAM world.
If you look at to the right hand side of the bar chart with the different countries, so how why does it have this kind of shape? Because one country has a lot of
Mm.
suppliers. Maybe I can explain a bit.
I don't think that's so unusual. I think that's probably the sort of mathematics of it, that
Mhm.
you will typically have more suppliers from one country than the next lot put together. Like it sort of follows an exponential or logarithmic distribution. I don't know. In simple terms, European companies buy more from countries that are closer to them.
Yeah.
So I can't say which country's which here,
No.
but if you buy, a European importer is likely to buy goods from the UK or from Turkey at an order of magnitude more than from Indonesia or somewhere like that, even though that's a larger economy.
Yeah, yeah. And by the way, I can imagine that the user of this of your CBAMBOO Pro version will have access of which countries is which, etc.
Yes. So we've just anonymized this for public use. Yes.
Yeah, all right, no problem. So next, what is it optimized, and then we can go beyond maybe.
Our job is to optimize carbon taxes for procurement teams and CFOs. And so CBAMBOO Pro lets us get right up in there to help procurement teams figure out what their cost is and reduce it. Actually make sure that they're paying less tax than they otherwise would be. And we are really, really excited to be talking about this. We are looking forward to launching this. We're happy to offer everyone on this webinar advanced insights into this by setting up a demo conversation with them ahead of the launch, if they're interested in seeing that. So they can contact me on LinkedIn. I'm pretty easy to get a hold of, pretty available, or they can go to cbamboo.com/demo and they can book a demo right away.
So when I look at this slide, you see in the middle the carbon flow. Can you explain how does it work? What are we looking at?
Oh, sure. So carbon flow is one of the core systems that we've built in CBAMBOO. And to us, it's just the absolutely natural way that you describe the emissions of a production site. So in that little screenshot there, you're looking at one company's production line. You're looking at imported goods, a production process in green, and then the goods that are produced. And for each of those nodes on the chart, you add information about the emissions. For the precursor, you add emissions data based on what that precursor company tells you. For the actual process, you say how much fossil fuel did you burn, how much electricity did you use, and the system calculates the rest for you. Pretty simple. And then you just have to say the CN codes of what you've produced, and bingo, you're able to produce CBAM ready numbers for your customers in the EU.
So I really like this visualization of flows, because most of the software environments I stumble upon are a spreadsheet on steroids. So
Yeah.
and normally nowadays people don't like to want to look at the spreadsheet anymore. They want to have some other kind of visualization to make sense of it all. So
I
that
think it's very important when you're asking a manufacturer to describe the carbon emissions of what they're doing and put it into a spreadsheet. Well, they can follow a 100-step formula and end up having filled in a spreadsheet. But then they can't sense check that because they've no idea what they've done. So when they look at this layout, they can say, oh, yeah, that's my factory, emissions from here, got it. It makes sense.
yeah. And moving on beyond, CBAM is something that's coming at us as of January 2026. But I can imagine with these flows, have you ideas to move it beyond CBAM or for the other purposes? Because I think it's very powerful to have this kind of visualization for other CO2 emission related data.
We'd absolutely love to do that. Once a company has put together their supply chain emissions data on our platform, there are many different applications of that because this becomes the most granular and sophisticated view of their carbon emissions exposure, which is something that a lot of companies want to get help on. And, we've built what we've built, but we also build bespoke versions of our product for enterprise clients. And if there are particular readouts that people are looking for from this data that are specific to their own company, then we love to hear about those. We can build something specific for those. And then we can also possibly consider incorporating it into the main software package if it becomes something that is widely requested.
So we're getting to the end. So we have some minutes left for Q&A. So feel free to ask questions. But I have a question to start with. A lot of companies, they have their ERP instances. Sometimes they have one ERP systems, and most of the time they have more than one. How do these ERP environments relate to this kind of system? Because you have, procurement systems and maybe a part of an ERP system. So do you have connections, APIs for that? Of is it more standalone environment? So what is the IT environment we're talking about?
So it's case by case.
Hmm.
So should I put my camera back on maybe at this point? Um, Let me know if I should. The
Yes, please do. Yeah.
Yeah. The 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 uh, the integrations are done uh, in line with the customer needs. So sometimes we're able to support them natively. Other times it's a bespoke process. We have a system for using AI to take purchase orders and translate them into data because the outputs of ERPs tend to be very heterogeneous.
Yeah.
So we use machine learning models to standardize those, and then we can add the supply chain data to produce a complete picture of your future emissions.
Okay. Clear. No questions here, but if it's we're getting into 25 already, halfway. So what should supply chain directors or procurement directors do, say tomorrow? So apart from calling you, but what are the first steps to consider this whole topic of sea bamboo?
Look, do a back of the envelope exercise. Try to figure out how many tons of steel, aluminium, cement, fertilizer, and let's throw in polymers and plastics too, because that's coming,
Mhm.
that you import every year as a company. Look at the whole scope from outside the EU. Work out how many tons that is. And let's say you import 1,000 tons. And then I would just use don't do any maths, but just multiply that by 200 euros. Why 200 euros? Well, typically you're talking about 2 to 3 tons of CO2e per ton of imports. And the carbon price right now is 75 euros, and it's going to go up from here. So you're kind of talking about maybe 200 euros, something like that, for every ton of CBAM goods that you're importing, which will be phased in, but we don't know what. So your importer of 1,000 tons of goods, you just right away you could have done it on this call. Okay, 200,000 euros, that's the ballpark. Do I have 200,000 euros lying around to pay a CBAM cost in 2027? Should I maybe be passing that cost on to the customer, of the end customer of the goods? Is that my business model? Am I a trading company? Should I be trying to push that back to the supplier? That will be an option for other companies, right? If they are small businesses dealing with big suppliers. Do I just want to absorb that cost? Probably not. Okay. But that is the question you should be asking. And then also you should say, well, if I've been given CBAM, but I'm not really responsible for being, for financial controls or budgeting or whatever, I would say take action by actually going to talk to the people in the organization who are and saying, this isn't just compliance. This isn't just filling in a form. This is real money at stake. And we need to get a system in place for tracking it right now, because we're buying these things now. It means we're paying CBAM now. It's just that the cash flow doesn't come for a little while yet. If you can get that message through the organization, then you can start saying, okay, let's set up a cross-departmental team to focus on CBAM, get this right from the beginning, and get out there and look for systems that can help you with that. And obviously, I would say CBAMBOO Pro can be the solution for many businesses in this situation. We're very excited to be talking about it with customers.
Clear, and I like, you are building a network where you gather all kind of data from from the suppliers of your customers, of your users. So basically, next to these 200,000 you just mentioned, CBAM costs or taxations, you are getting into the field of the new way to connect with your suppliers, to get data, not just for CBAM purposes, but also maybe in the future for other purposes. I think this will help you to get to the next steps of digitalization of your upstream supply chain.
That's absolutely right. Well, look, thank you very much for giving me the opportunity to showcase what we've built, and to talk to people in your network. And I'd love to continue the conversation.
Yeah. So right after this, we are almost on the hour, so we have an extra 30 minutes. So Gabriel and I will be sitting down in table one. So feel free to join us to have an extra conversation. But if not, that's fine with me. There's more information. So here's a link to our maturity matrix. What kind of startups do we have, and etc. And also more information about our contest. And there's a direct link for a demo call with Gabriel, and also there's a connect link to more information about CBAMBOO Pro. And here you have the contact details of Gabriel, not only on LinkedIn, but here it is. So I would say, Gabriel, thank you for joining. I've heard about CBAMBOO also, I think early last year, or whatever, but it's getting clearer now, and it has to be clearer right now. So thank you for joining me.
It's a pleasure.
And for the audience, thank you for joining me. And I hope you like it, whether live or in the recording. And I hope you have some urgency to make the next steps. So thank you for joining this webinar Wednesday. And next week, we're going to talk about our IT subway map, the new release. So also this is of important. For now, I'd like to thank you. And maybe I see some people right now, right after this in the virtual lounge. And I want to say bye-bye. Thank you. Bye-bye.